Many investors don't realize how important or detrimental it can be for the stock of your company or for the company when there is barely any trading or there's barely any people know about the company. It we don't think about it, but it is very detrimental. So let me give you an example. Because I'm looking at a situation or I'm looking at a company that is very much facing this. And I'm hoping that I will be able to help and solve this problem or make it better. Because right now, this company literally has like no trading. Like no trading. It's like trades by appointment. Barely anybody knows about it. So let's say, and I'm just going to throw out some numbers. Let's say you have a business that if it was private and you would get an appraisal on it, it would be worth 100 million. And it is worth 100 million because, of the revenue profile, future growth prospects, good margins. It's worth that much. Or even it has a strategic value to somebody else. It's worth 100 million. But at this point, it doesn't really generate that much net income. It's like break even. But it doesn't really generate that much net income that it could take this net income and like really make something happen, like really accelerate growth or make an acquisition. It's just there, right? And if it was a private company worth, 100 million, you could do many different things with it. You could, like, let's say, go to your banker or investment banker and be like, you know what, we want to make a capital raise. We want to raise $10 million. And with this $10 million, we see that we can make an acquisition because there is an opportunity somewhere. There's a distressed asset or let's say retail location. They're out of money or the owner wants to sell and he's willing to accept, a cheap price or reasonable price. So we want to raise $10 million and we want to make the acquisition. And that's no big deal, right? Because we're going to dilute 10%, but that's worth it because we dilute 10%, but by making that acquisition, we can improve our business, 5 times or whatever because of this strategic acquisition, right? And you can make that happen. And it happens in business all the time. But now, let's say you enter a situation where this company is not private, but it is public. It's public, but the management hasn't really done anything to tell the story. Barely anybody knows about it. There is really no shareholder base. The stock doesn't trade that much. And because the stock doesn't trade that much, when there is a seller, the seller cannot find any buyers. And then they just keep pounding the stock. And then the next day you wake up and you realize, not next day, but as a result of this, the company's valuation based on the market cap is not 100 million. Let's say it is 10 million, right? It really doesn't reflect the true value, but that's what the stock says, right? It's 10 million. So now the same business model, the same thing, revenues, margins, blah, 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 just enough profitability to exist, but not enough to do anything, right? So now your valuation shown by the market is 10 million. And so can you, in this instance, take advantage of this acquisition that you have that, you can get for 10 million? Not really. Now you have a problem. Now you have a problem because it doesn't. You wish you could say, well, let me sell 10% of my $100 million business and make that acquisition. Now you can't do that because the market says that you are a 10 million valuation. So if you wanted to make this acquisition, you have a problem because now you're not going to be diluting by 10%. You're going to have to dilute by 100% to make that acquisition. And now all of a sudden, this acquisition doesn't make any sense because this acquisition maybe will improve your business this much, but if you have to dilute this much to make it happen, it doesn't make any sense. So you're kind of stuck. And that's just, with an acquisition. What if you had a similar situation where your business, again, is worth 100 million, but you have a 10 million of debt, and then that debt is coming due. The lender wants to get paid back. Well, if your valuation is 100 million, you go to the banker and you be like, let's sell some shares, let's dilute 10% and pay off the debt. But because nobody knows about you, the stock is down, and now the market says your valuation is 10 million, even though everybody knows that it's really 100, but the ticker symbol says it's 10 million. Now, if the lender wants to get paid back and you have to issue shares to pay it back, guess what? Now you have to dilute 100%. And it all comes from the fact that nobody knows about your stock. You don't have any investor relations. You don't go out there and promote your company, right? As a CEO, you should. Now you find yourself in a problem like that. And you see, so I see this kind of stuff all the time. But I also see situations where, and there are some companies on MCE where they don't do anything in terms of, let's tell our story. Let's go and do interviews. Let's have some they don't do anything, right? They act like a private company, but they can get away with this because they don't need the market. Like, they're profitable. They are growing, not fast, but they're growing slow. But they have zero interest in going to the market and raising money. Zero. Because they can finance themselves slowly, but they can finance themselves with internally generated cash flow. So they don't care, right? But to you as an investor, nothing is happening, right? Because they go so slow, and the stock barely trades. The stock doesn't go anywhere. You get bored. You don't really lose money, but you don't really make money. But they don't care because they have such a long-term vision that they don't really care because they know that, 10 years down the road, they're going to either sell the company for much more or uplist. They just don't care because to them, it's like they don't look at the stock price. They own the percentage that they own. They're not going out of business. They have enough money to pay their bills. They're like, why should we make the stock price go up through getting more awareness? Because, okay, so if the stock goes from $5 to $10, they're not going to do anything with this. They're not going to use their stock as currency to make another acquisition. So they're like, okay, well, it looks good on the screen for me. Yeah, my brokerage account says that I have more money, but I can't really do anything with the stock, right? So they don't care. But when you have a company that wants to make things happen or accelerate growth or take advantage of an acquisition, then that becomes important because then your stock becomes a currency, right? And so I'm looking at this company right now that is in a situation like this where their valuation is up there, is really up there based on their fundamentals. But the market shows that they're only worth 10% of this or something like that. And they cannot do much. They cannot do much. They can, I mean, it's already worth like 10 times more, and it's going to be worth even more because they got things going on. But it's very difficult to like really accelerate things because like nobody knows about them. The stock barely trades. So I'm trying to see if I can be part of a solution where, you know, I introduce it to my members at MCE, and if you are a member, then you would find out about it much quicker, right? And then, you know, maybe talk about it on YouTube so that this situation can be rectified. And then they would be in a position where they could take advantage of the opportunities that are out there, because in their space, there is a lot of distressed sellers that they could acquire a lot of different assets on the cheap, but their stock cannot be trading at 10% of what it's worth. It doesn't make any sense. Kind of similar situation if you look at what happened with Plurilock Security. When I got involved, their market cap was 2 million. They had 70 million of revenues and their market cap was 2 million. And they needed money. Like with a valuation of 2 million, they were out of options, because what are you going to do with a 2 million valuation? Make an acquisition? Like your currency is 2 million. You're going to make an acquisition with 2 million? What are you going to acquire? An ice cream stand, right? Like, what are you going to do with 2 million? So because of the way that the stock was valued by the market, and it was nowhere close to the valuation, they had to accept a capital injection of $5 million and dilute by a lot. But as a result of this, the running out of cash was not an issue anymore. And now, if you look at the market cap, is closer to 50 million. So the market cap went from 2 million to 50 million in a matter of 3 months. And now, because the market cap is in the range of 50 million, now all of a sudden, options open up. Because now, with a 50 million market cap, do they have options to maybe acquire other cybersecurity companies and add to their client list? Yes, now they have option, because 50 million is a better currency than 2 million, right? So how much your stock trades, what the market assigns to your company based on the fact whether you want to tell people about your company or not, makes a huge, big difference. Makes a huge difference. So anyway, that's it. So like I said, I'm hoping that I could get involved with a company that I could help fix the situation. First, MCE members are going to find out about it if it happens. Then I would also send out an email that I am getting involved. So if you are on my email list, which the link to my email is in the description below, I would give you heads up that, hey, I am getting involved. I'm not going to necessarily reveal the name of the company, but I'm going to let you know, hey, I'm getting involved, FYI. So put your name in my email if you want to be notified of something like this happening. But in this video, I just wanted to tell you that the market cap of a company matters. And I'm not talking about making the market cap being, overvalued. I'm talking about the market cap being reasonable to what the value is, so that the company can take advantage of undervalued situations. But if you are more undervalued than the opportunities you want to acquire, then you have a problem.